G'day traders and welcome to a wrap up of the markets for Wednesday the 30th of October. So today's FOMC announcement. So for those of you who haven't heard of that before, FOMC is the major interest rate announcement in America. It's the most influential economic news out there as far as what happens within the market. It happens 8 times a year, and it's just like when the Reserve Bank of Australia meets and decides on interest rates multiple times a year. It's the same thing with FOMC. So it happens 8 times a year, meaning about once every 1.5 months. And it's usually a day that's pretty typical of what happened today. A fairly lack of movement, and although today there was more movement than normal, but normally what happens leading up to FOMC, which comes out about 2 o'clock in the afternoon, you'll get a really sideways movement. And then if I sort of fast forward, there's the announcement there, 2 o'clock. And then you get this erratic movement within the market. So, the sort of mindset of the traders is, okay, they know today, FOMC is sort of one of those 8 of the biggest days within the year as far as economic news. They tend to wait off, see what happens. So therefore, there's a sort of a drop in volume and a lack of movement. Then all of a sudden, FOMC comes out, or the interest rate comes out, and there's just this mass spike of volume, and the market just goes crazy. So depending on how you trade, your trading style, I normally say, I treat it a bit like a roster day off, or I'm still there, but I'm very careful with how I trade because you get in this very sideways movement followed by erratic movement. It's a bizarre day to trade. So it's good to watch it and be a part of it and sort of learn from it. But yeah, as far as trading it, it's something to be very careful of. And you certainly want to be aware of when days like this are coming up because it's a different type of day. So what I do, just to sort of give you a site, I use forexfactory.com. Now, obviously that means related to the forex markets, but it doesn't really matter. Any sort of economic news calendar is relevant to all the markets. It's not specific to a market. It's just it's economic news which we want to be aware of. Now, as far as using economic news, everyone's different, but I think being this is my view on a technical trader. Now, we're very much involved with the charts and looking for technical patterns, so we want to be careful that we're not influenced by fundamental analysis or economic news and look into why news is happening. Okay, we definitely want to be aware of it so that we know when to avoid certain times. So if I know FOMC comes out at 2 o'clock today, I know it's a different type of day and to avoid that sort of 2 o'clock period. And that's about it. As far as looking into why things move, what's going to happen, it's going to really conflict with your sort of technical analysis. So it's really you want to be on one side or the other. Some people can use a combination of the both, and really it's up to the individual trader. But I guess for yourself, you've got to be very aware of, how do you want to do it? And me personally, and I know a lot of other traders do the same. It's if you're a technical based trader, you're looking for patterns within the charts. Tend to stay away from news and sort of looking into the effects of it. Got to be aware of when it happens. Like I say, most mornings around about 10 o'clock, or at 10 o'clock, there's fairly major news announcement. So again, you want to be aware of that and not sort of be getting into a trade just as that's happening, because we know you can get some erratic movement. But that's as far as I take as far as interpreting economic news. So with this particular website here, I just look for the ones based on USD, okay, obviously United States, and the red ones. Okay, so red means major economic news, and if there's anything within the cash market, I just I'm aware of that particular time frame and just know just be careful of that time frame. So this particular day, 8:30, that's before we start trading, so doesn't affect us. And then today, here it is, 2 o'clock, red announcement, FOMC statement. So look out for that. Happens 8 times a year. Righto. So let's bring over the 15-minute chart. Have a look at where we're at. So we've got these horizontal support and resistance areas. Really looking to see what happens. See if we can deal up around this 1760 plus 62 region and get another support resistance. There's a fairly significant top here, but we're just looking really to confirm it. It sort of is dealing around that a little bit. But we'll be interested to see if the market comes up, what it does around that 1762. So that's an area that we'll keep an eye out. For now, we've got a couple of regions down here. We talked about in previous wrap-ups this 1752 being a very pivotal point in the market. It really held the market down, and all of a sudden it got above it. It's used it as a launching pad to go higher. So when we start to get some sell-offs, we'll talk about this being a particular area where we want to see, can the market get underneath it. It just so happens today, and you'll see it on the 1 minute chart too, to the tick, it bounced straight off it. So it's just a sign there that the buyers, even though it had this big sell-off, at this moment are still just holding. And as we move into this little bit of a pre-market, now that the day is finished, you can see we're bouncing off it again. So quite significant that 1752. So here's the pre-market box that we draw in. So mark that 10 o'clock and pre-mark up till 10 o'clock and pre-market high and low points. So it sort of segments the market. We want to see what it wants to do. So you can see we've come down, created that low, bounced off it, come out again. That's where we broke through, and then we've bounced back and used as resistance. Then the push lower. So real indication that there's certainly some sellers around. Although talking about today in the trading room, like I say, it's just one of those days where it's a little bit more difficult, knowing that FOMC is sort of in the background and that you'll tend to get quiet movement, followed up by some erratic movement come the announcement. But today wasn't too bad, a little bit more movement than what we'd normally see. So basically, we've got on the sell side, we're showing that sellers are starting to come in by breaking outside that pre-market box, using it as resistance, and then FOMC out it comes, and you'll see this. If you watch it live, you'll see it just looks like it's heading in one direction. All of a sudden, it'll turn around on the spot and just go racing back in the other direction. You can see it's moved 6-7 points in multiple directions, about 3 or 4 times there. Then there's some massive movement to the downside. You can see where we almost to the tick there. We've bounced off this major pivotal point or support and resistance area within the market. And when you see this sort of movement, obviously it's for us it's not really tradable, because we're talking of having a stop loss of about 5 ticks. So when you got individual 1 minute candles moving sort of 1, 2, 3 or 4 points, which is 12, 16 ticks, and we're looking at a 5 tick stop. No, it's just crazy to be trading these sort of markets. All you'd be doing is gambling, because the market could stop you out within an instant. Of course, it could get to your profit target within an instant too, but we don't want to be dealing with something like this that's so erratic, and we know that this is what happens come 2 o'clock. So it's definitely worth watching and sort of learning a bit from it, and sort of seeing it in real time. Just being aware that it's certainly not something that we like to trade. It's quite volatile, crazy moving markets, which we'll get each time there's an FOMC announcement come out. So we'll wrap it up there. A good day to see, and next time there's an FOMC, definitely recommend getting there and watching and seeing what happens in live. But anyway, we'll be back tomorrow and do it all again.